What we heard from Mario Draghi, enough to convince some investors that there were hints there at an extension of QE, just the fact that he said that QE won't fall off a cliff. There will be some tapering as and when they decide that it comes to an end. But that sounds like a conversation for another day, doesn't it? I mean, the extension of QE is the more pressing matter.
Absolutely. And it's always interesting with central banks, whether it's the ECB or the Fed or Bank of England, it's always about finding the right balance between trying to give the impression that the economy is maybe stronger than people think it is, or the reality rather, but also wanting to, also talk about the reality, which is that, things are a lot weaker than it should be. If you look at unemployment in Europe, it's still above 10%. And it's going to be an awfully long time before it falls to the sorts of levels you have in the UK and Europe. And that's the reality. And so whilst yesterday there was a bit of a focus on whether you're going to end QE or taper QE, actually the real focus is on the fact that they're probably going to continue QE beyond March.
And December we've got a chart there, shows expectations of economists that actually December is the time that we're going to learn more about QE. What do you expect they will do to it when they do make changes? I spoke to David Owen at Jefferies earlier on today, and he was saying they're going to extend the time horizon, they're going to allow themselves to buy things that yield below the deposit rate, and they're also going to allow themselves to buy more of each issuance than they're currently allowed to. Those are the kind of changes that you're anticipating?
Well, there's a question as to, how many bonds are there that they can buy. They're running out of things to buy. But they could continue to buy other things. They could buy bonds of lower quality. They could buy equities. I mean, ultimately, it's about buying assets from the market, about persuading people that they're going to keep on doing this until people realize that actually they might as well go out and spend. This is all ultimately about trying to boost confidence, to boost economic growth. And to that end, I think they can continue to find assets to buy.
I've got the chart here, BTV 4447, if you've got the Bloomberg one, find it. But this is what's happened to the euro overnight, making the point that as it dropped below that 109 level against the dollar, that went through the weakest point on the day of the Brexit vote count. So some significant weakness in the single currency overnight. How do you interpret that?
Well, I interpret that as saying that actually, the reality is that Europe is still a lot weaker than the US, a lot weaker than the UK. And it's a lot, the recovery in Europe only began in 2012. In the UK and the US, it began a lot earlier. So, that's the reality, is that Europe is essentially still very weak.